Hello everyone, welcome back to my channel. So this video marks the end of the week number 72 in this road to 100k realized return challenge. And this was a week of some ups and downs, and ultimately, indexes, the major indexes went down in a big way yesterday on Friday. And so we have some ground to cover here, but first of all, I just want to let everyone know that this video is coming up, is being posted a bit later than usual, because there is some maintenance going on, and for some reason I cannot show the graphs, the entirety of the graphs here, the charts. For some reason there must be some maintenance going on at the platform, and yeah, I try to wait as much as possible, but yeah, it's already late in the evening, and I decided, yeah, probably this won't hurt us too much. At least we're going to try to cover everything the best way we can. And so as I mentioned at the beginning of this week, the major highlights of this week would be the Fed meeting on Wednesday, as well as the earnings of the tech companies, Oracle on Wednesday, and also Broadcom the next day on Thursday. And the Fed ended up not disappointing. The Fed ended up um, lowering the interest rates by 25 basis points. It was not a consensus decision. Even before that, we can see here that job openings increased up to 7.7 million, which is a slightly positive sign, but this is not a really big indicator that the market makes a big move on. It never does. Also, the jobless claims, on the other hand, had an increase from the previous week, a rather big one, as you can see, more than 40,000 more applications for unemployment benefits. And not only that, the continuing claims continue. uh, Basses is no more. Continue to be very close to 2 million. But yeah, this is a tell sign that on one hand, yeah, the unemployment continues to be somewhat of a problem to a specific margin of the population, and the fact that there is some job openings may indicate also there is some sort of mismatch of skills between the skills that employers are looking for and the skills provided by the workforce. But the main topic, as I mentioned, was the Fed meeting, and as I mentioned, it was not a consensus decision. The markets reacted quite positively to the announcement, because not only the interest rate announcement was made, which was already expected a cut, but they also, Fed Chairman Powell also mentioned it would buy again short short-term bonds to drive down short-term yields. So basically, this means that they are going to enact a sort of quantitative easing again, to make sure that interest rates remain low on the front end, and hopefully this will continue to support the economy in this way. And also, it mentioned that the labor market, even though it does not said remain low, but remains, he gave some indications that remain weak, and so the market basically said that, basically took it or interpreted as additional cuts may be on the pipeline. So yeah, even though they only expect one more rate, the Fed itself will only forecast only one rate cut next year. I don't see this as being very reasonable, because we're going to have a new Fed chairman in the coming months, And so yeah, probably this person will have different thoughts about the path that interest rates may take in the future, and so this forecast may not have much value after all. But this is what went about during about the meeting of the Fed. Now, Oracle on the same day reported earnings. They fell short of the expectations on the revenue, which is basically, I think at this point is more important the earnings, because the earnings have other things in the mix, but especially the revenue came up short. And so, yeah, valuations of tech companies at this point are stretched to an extent that if there is a slowdown in the amount of revenue that it is taken, that the companies are taking, or a slowdown in the growth rate, yeah, the stocks are punished heavily. And this is exactly what happened with Oracle. And this basically drags the entire tech sector along with it. And that is the reason why, if we look at the Qs here after the interest rate, the interest rate decision, which brought the market up, then the next day, when the investors were digesting the earnings of Oracle, yeah, the Qs gapped down in a big way, even though they recovered then at the end of the day. But still, this is something that we need to keep in mind. Also, and another sign that investors are getting nervous about, again, everything which is related to AI, is that Broadcom also announced its earnings on the next day, on Thursday. They beat the target, they give a strong guidance, but still, it was not enough, and the the tech stocks continue to tumbling down across the board, and this manifested itself at its highest in the biggest way possible on Friday, with this large drawdown, as you can see here, even though there was a recovery here later in the day, but still it to no avail, and the market continued to come down. And because of this, the NASDAQ was the only index that did not reach all-time high as a result of the Fed decision. The S&P and the Russell 2000 reached all-time highs, but the NASDAQ did not do so. But of course, then with the Friday session, all of them pulled back significantly. But yeah, this was what happened basically in the market. Again, because of this situation, we were more cautious than usual when it comes to placing our trades. Even so, we still managed to collect $1,489 here of the positions that we had, that we closed throughout the week. We don't have any positions open except the QQQ shares, the triple Q shares, and at this moment we have a cost basis of 622.78. But of course, we still are going to try our best to sell them at the cost, that at the price that we bought those, which is, as you can see here, 630. Nonetheless, I'm going to show here that here we even tried to sell at 631 on Monday, as I mentioned in the last video, but these calls were bought back by me a little bit later, about an hour. Yeah, actually, about half an hour into the session, because they were losing money quite fast. Basically the market reverted into the red after the open. That's why this price was already available 11 cents from 39, as you can see here, in the space of yeah, half an hour, a little bit less, and I decided to buy them back at 11, because at this point they were getting so much out of the money. Then the delta was getting very low, and because of that, it would take progressively more declines, larger declines of the stock to be able to move this premium further down. And because of that, I decided, all right, there is still some value to be captured in the 630 calls. So let's buy back these ones, sell the 630. That's what we did. Of course, expire worthless. This put that we sold on IWM for 35 cents also expired worthless, as you can see. Actually, no, sorry. This was assigned because the market as a whole came down. We were assigned. We were forced to exchange some currency to dollars to buy them. Yeah, this is correct. My apologies. Probably because it's already a bit late in the morning. And yeah, we basically went ahead. We the next day we sold a call on our cost basis, 251. The market ended up going higher that day, so maybe we could have sold at 252 at the time, but still, when the pullback, there was a pullback even during this trading session, and the 252 would not be assigned, but this one, as you can see here, it ended up being assigned, and we sold the shares at 252. So our cost basis, same price, and we ended up having a profit from premiums of $98.80. Now again, yeah, we also sold this call here at 630 because the market was quite low at the moment on the 9th, on Tuesday, and so I decided, all right, since it's quite low, we are not going to be able to sell a call on expiring on the same day, and so we are probably better off to try to get as much premium as possible by including a call that will encompass all the key events, which are the Fed decision, the Oracle, and the Broadcom earnings. And so that's why I sold the call expiring on Thursday. So encompassing 3 trading sessions, the one on Tuesday, Wednesday, and Thursday, and we sold them. Here it is, as you can see, and we progressed throughout the day. These shares from IWM were sold. Again, we sold a 248 put because the price was further down, but this ended up being a bet that yeah, basically the market, the IWM skyrocketed after the Fed decision, and these puts were very much out of the money and close to being zero value. But I decided not to buy them back and opened another position at a higher strike. We could have done so. The price shot up to 253, 254 after the Fed meeting, after the Fed press conference, but I decided not to take the risk because it could be that there was a pullback. A pullback could happen, and we would be forced to buy the shares at a all-time high price. And this is something that I would rather avoid. So we decided to let it go at the end of the trading day on Wednesday. And on Thursday, with the money we had left, by the way, on Thursday, the price continued to go up on the IWM, 255, 256. And I decided not to sell another put again on IWM because it was trading at all-time highs. And I decided to, because the Qs were trading at a lower level, around 620, give or take, something like that. And I decided to use some sort of a proxy of something of the NASDAQ that is still undervalued relative to the peers, the S&P and the Russell. And what better stock to make it as to use as a proxy for the entire NASDAQ index that Nvidia. We already done it last week. We did it again, and so on Thursday we sold another put on Nvidia expiring yesterday on Friday. We sold only one, and then we used the remaining cash that we had to sell another put on another proxy of the tech sector, which is the ARKK. We did so. We used the money from the XLF because after the Fed decision, the stock continued, the XLF continued to rise 54 and a half. So this put of 52 and a half was basically almost worthless, and so we bought it back at 2 cents and we sold the ARKK put. We still managed to keep throughout this time around 6,000 euros in cash in buying power, but it was enough for us to sell another put on ARKK, but I did not want to take the risk to have two puts on this illiquid and very volatile ETF. And we could have done it on XLF, but the XLF was trending so much higher. I decided it's probably not worth the risk to sell a put at a higher price, because if there is a pullback, we will be in trouble and be again forced to buy at 53.5 or even 54. There was no point in doing so, so I decided against it. I decided to keep the money. And on this particular day, on Thursday, we bought back the calls on the Qs because they're already at 9 cents. And going further down, keep in mind this was 45 minutes into the session. We could have waited until the end of the session to let it expire and open another position on the next day, on Friday. But we decided against it because already at 9 cents so early in the session, and with a volatile event still to come, which is a Broadcom earnings, this was already too low of a price, and these calls were already very much out of the money, and it would take, as I mentioned, because the delta was getting so low of these puts of these calls, it would take much larger declines and further declines of the Qs to bring this further down. And the next day call was still healthy in terms of premium, and we managed to get at 50 cents. So there was this opportunity. We bought this back. One of those at 8 cents, the other one at 9 cents a share, and we sold again these 5 calls at 50 cents each. Now, this ended up being a very good decision. And why is that? Because the next day, on Friday, the market plummeted in a big way, and we would never be able to get this premium on Friday. And so we managed to the market basically worked in our favor in this particular situation. Even though the market plummeted, we placed the Nvidia put, the strike of the Nvidia put and the ARKK put pretty much out of reach. And so even though the market plummeted, Nvidia came down 3%, ARKK I think also came down, but they never came close to the strike, and so they expired worthless, and we keep the premium for ourselves. And so this was the result. Now, considering the fact that the Qs finished the week at 612.80, I'm not expecting to be able to get this amount of premiums next week, almost 1,500, because we are very much miles away from in terms of difference between the cost basis and the share price. And so the market really has to recover for us to be able to get some sort of performance like this. And that's probably the reason why I decided not to buy back these calls uh, when we were almost expiring, because the price is so low. The price of the shares of the Qs are 612.80, so they are so low that we will have to extend our maturity if it stays like this. And as I mentioned in the last week, there's also possibility, as it usually happens, that on Monday morning the stress has gone and it will open higher. And if it opens higher, we will be able to collect a bigger premium when we sell the calls again, because we're not going to sell below the 630. And so, in a nutshell, this is basically what happened. It's going to be probably another sad week ahead of us next week. Um, I've seen here what are the earnings for next week. There, keep in mind this may be a wrong list because yeah, it's very hard to find a website that has the correct earnings dates. I see here that yeah, there is nothing really remarkable taking place in terms of earnings. Nike could be a market mover. FedEx could also be a market mover. But other than that, Accenture maybe, but I don't see anything else that can really rock or make the markets move. Yeah, but yeah, we will see what happens. But I'm not expecting the next week to be a positive one, but we will wait and see. For the time being, this is all. Feel free to leave your comments in the comment section down below. I am also available on LinkedIn in case you need to ask me any questions. And of course, feel free to like the video and subscribe to the channel. And we'll reconvene either on Monday evening or on Tuesday morning to start the week number 73 in this challenge. And yeah, I'll see you there.